Hello everyone, welcome to the Market Outlook midweek this Wednesday morning. Gaurang Shah here from Geojit Financial Services. And as we get back to the trade, there was a holiday on Monday on account of Guru Nanak Jayanti. Yesterday we did see markets recover and move above those resistance levels of 19,850, 19,875. Follow-up uptick this morning, and as I speak to you this Wednesday morning at around about 10 o'clock, let me give you certain levels on Sensex, Nifty Bank, Rupee Dollar equation and crude oil, that is Brent and NYMEX. Sensex is up about 360 odd points and the level is 66,535. Nifty is up about 116 points. 20,002 is the level on Nifty spot. Bank Nifty is up about 250 points, 44,135. Rupee dollar equation, little bit of strength on the rupee against the dollar, 5 paise strength, and the level is 83.28 against a dollar. And on the Brent and NYMEX, absolutely flat, both of them. Brent is trading at about $81.65 to a barrel, and NYMEX is trading at about $76.55 to a barrel. Let me give you certain triggers and what is expected for the remainder of this week. Tomorrow we'll have the F&OExpiry, friends, so expect a little bit of choppiness and volatility. Next week, when we get back to trade on Monday, we will possibly have the outcome of the state election and the markets would possibly react accordingly. Now, given the fact that we have recovered a sizable amount of ground and trading above that 20,000 mark on the Nifty spot, prudent to expect a little bit of volatility and choppiness on two accounts. One is, of course, tomorrow's F&OExpiry and next week because of the outcome of the 5-state election. Knee-jerk reaction is definitely going to be there. So if you are a short to medium term trader, our advice would be to take some money off the table, and if you want to earn more, then possibly keep your profitable stop losses in the system so that you are not caught unaware. From a long-term point of view, we have always advocated that corrections are a great opportunity to buy, and that's what the market has exhibited in terms of long-term investments. We are also of the opinion that news flows from the global front are a little bit positive, tailwind positive as far as our markets are concerned. FIs have started to buy into our markets, and that has led to a little bit of more positivity and strength on the upside. Expect this move to last at least post tomorrow's F&OExpiry, but next week is going to be a little bit challenging. Hence, our advice to short to medium term trader is take some money off the table or put profitable stop losses in place. On the crude oil front, given the fact that we are trading at somewhere close to about $81 on the Brent, $76 on the NYMEX, outcome of the OPEC plus meet, which is likely to happen by this month end, is what we have been told, will possibly give some amount of direction in terms of where the crude oil prices are likely to go. So one will have to just wait and watch. But there are a lot of themes in the market. Post the second quarter earnings, there have been decent amount of upgrades in terms of sectorial, company-specific investment ideas. And our view is that this trend is likely to continue even in the third and the fourth earnings season and possibly next financial year. Investment ideas we share, couple of them every time we interact. Today we have two different sectors which are not largely spoken about. First one is from the life insurance segment, a leading name in the sector, and that is LIC of India. As a disclosure, we had come out with a subscribe recommendation when the IPO was there. Of course, IPO was at much higher level and then the stock corrected. But our outlook as far as Geojit Financial Services is concerned on life insurance sector remains positive, not only on LIC of India but also on HDFC Life, ICICI Prudential Life and SBI Life. And the reason being is that though investment into insurance sector may be a little bit longer compared to the other sectors, That is purely because of the expectation of new premium run rate going up. What do you mean by new premium run rate? Is people who have not insured themselves and are willing to go ahead and take an insurance. And mind you friends, after the pandemic, individuals are willing to look at higher sum assured. Now when you take a higher sum assurance, definitely by default you have to pay higher premium for that, and that translates into earnings for the life insurance companies. And there is a huge market. Insuring the uninsured is the theme that we believe life insurance companies are going to execute at ground level, and you are likely to see a re-rating of this sector over a period of time. It's not going to be immediately. So the first investment idea is LIC of India, that is Life Insurance Corporation of India, and the second one is from the infrastructure space. Of course, state election done and dusted, you will see infrastructure tenders being floated, and most of the private sector companies which are associated with infrastructures will likely get the benefit of that. And of course, next year, once we have the bigger election done and dusted, reforms will continue. The name of the company is KNR Constructions. And mind you, like insurance sector, infrastructure sector also has been a sideways performer, and that is purely because of the earnings. Now once the earnings improve, stock prices of the respective companies get re-rated on better earnings. So our view is that in the next maybe about 1.5 year, 2 year plus kind of time horizon, both these sectors, life insurance as well as infrastructure sector, are likely to perform better over a period of time on earnings visibility. Order book is decent for KNR Constructions, and so is the case in terms of execution of that order book. Both these companies are fairly priced, limited downside if you will, and in terms of earning visibility, re-rating is quite highly possible for both LIC of India as well as KNR Constructions. Mind you friends, these are long-term investment ideas, so you need to have longish time horizon in mind. Preferably 1.5, 2 year plus kind of time horizon would be appropriate. Don't go and buy everything at one time. We always advise staggered investment. Start at current levels with whatever risk appetite you have, and then follow it up whenever you get opportunities at lower level to add to both these stocks. Thank you very much for your patience hearing, and I'll see you again. Take care. Bye-bye.